Welcome back to the channel. This is going to be a reaction video of the Bilyeu podcast featuring Michael Saylor. I'm going to provide some counter arguments, rebuttal. So Michael Saylor, if you're watching this, please comment down below. I'd like to hear your thoughts on what I have to say about your remarks. This is not financial advice. This is for educational purposes only. I hope you enjoy. Before we get started for the reaction video, please like and subscribe. Another note is I'm going to be playing this video at 2x speed so I can comment it and speed things up. And I will pause the video and make comments. So let's go ahead, get right into it.
Added a little over 100K to the 13 million, a coin that you consider the base case.
Yeah, I think I've always said it's either something or it's nothing. If it's embraced as an institutional asset, if it's legitimized as an asset, then it's not going to zero. And if it's not going to zero, it's going to a million. And I think the short answer to your question is education. And with education comes adoption. And
quick comment on that, right? For Bitcoin to go to 13 million and not zero, there still has to be a lot of things to play out. I know Satoshi, right, has been commenting if it's the real Satoshi. Some clarity that we're going to need to see with the new Trump administration is where is Bitcoin? Where was it created? Who are the founders, right? If it's not American based, then who is it? Can we trust it? Can Satoshi rug pull everybody? I know he only owns 10% of the Bitcoin, but right now I do slightly agree with him here. If federal central banks around the world continue to print money, you're going to see an asset like Bitcoin continue to go up in its sticker price, we'll call it, because there's no intrinsic value of Bitcoin, right? It's on the cryptocurrency blockchain, right? You could consider it just a hedge against inflation at this point. To go up to 13 million, I'm not saying it's impossible, right? Over the past 100 years, the value of a dollar has decreased by 99%. So yes, hypothetically, Bitcoin, there is no top for it if you get people to continue buying. So let's continue on.
And at this point, you just have 95% of the world that still doesn't quite understand what it is. And that means, the way Bitcoin marches from 100,000 to 13 million, and by that's for your listeners, you're referring to my long-term forecast. I gave that forecast in Nashville in July of this year. And it's based upon the Bitcoin 24 model. So the Bitcoin 24 model is an open source macro model of Bitcoin adoption and macroeconomic development over the next 21 years. Anybody can go to Google and they can Google Bitcoin 24. They'll find it on GitHub. You can download that model. You can plug in all your own assumptions and you can check what we thought. But my forecast is Bitcoin, in essence, it's growing 60% a year for quite a while now. And I'm forecasting it will decelerate to 20% a year over 21 years. But that means on average, it grows about 29% a year, ARR. And that's
a lot of stuff thrown out there real quick. All right. So over the past 10 plus years, 60% compounding growth rate. That is not that difficult when the market cap of Bitcoin or all of the coins that are owned gets larger, right? There's not an unlimited money supply of assets in the world to just buy Bitcoin. Okay, so the way that the price, like I just said, goes up and goes up and goes up is if currencies around the world continue to get debased, devalued, dilution, and folks are continuing to buy Bitcoin. Right. Also, remember, it's good to mention this up front. Michael Saylor is heavily leveraged on his company, MicroStrategy. It's a public company. So if Bitcoin, I've seen some numbers thrown out there, were to fall below 30 or something thousand, maybe even 15,000, the company's going to go under. It's going to go bankrupt. It's going to go margin call. They won't be able to pay their convertible notes out to the shareholders or the buyers of those. So remember, you're listening to an analyst here. You're listening to somebody who's ultra bullish on Bitcoin. Why shouldn't he be? He's been right so far. But there are risks. We've seen Bitcoin go down 50, 75% in a matter of a year or two. So, just remember that through that lens, that he's going to be giving you the story through rose-colored glasses.
29% a year for 21 years gets you to 13 million a coin. And so what do I expect to happen? Well, I expect lots of high net worth individuals that previously thought it's too risky or it's too scary. They see it legitimized by BlackRock. Now, BlackRock is giving guidance that you could have 2% of your portfolio in Bitcoin, and they're seeing the ETFs like IBIT, and they're noticing that these are the most successful ETFs in the history of the world, and BlackRock has got the most successful ETF ever launched, and now they're seeing the world's largest money manager, BlackRock, with more than $11 trillion of money managed. They're seeing them publish scholarly, thoughtful, responsible white papers on portfolio allocation, and instead of the 60-40 model with 60% equity and 40% bonds, now you've got 2% that they're saying you might want to put into a crypto asset like Bitcoin. So I think that you've got that group of people that are finding it. I also think you've got institutional investors that are moving into Bitcoin more frequently now. A lot of them are big investors in MicroStrategy, a lot of S&P, but we're more successful than all 500 S&P companies for the past 4 years. I think this year too. So we're getting the attention of mainstream investors.
Quick point on that. If you look at history and you've looked at past bubbles, when companies have run up to that extreme level like MicroStrategy has, typically it doesn't end well. So if you're looking at past performance, right, you've heard the saying, past performance is not an indicator of future performance, right? So he's trying to sell you on like, hey, look how well we've done over the past few years. If you're buying on that thesis alone, get ready for a bumpy ride.
And that's bringing a set of new investors to the asset class, because when they buy our stock, we buy Bitcoin with it. I think the third driver is a bunch of Bitcoin standard companies. A lot of companies are recapitalizing their balance sheets on Bitcoin. MicroStrategy was the first, but here is MetaPlanet, and they just did it, recapitalizing the Bitcoin standard. But you've got 60 companies that have Bitcoin. And
what he's basically saying is they're leveraging their company stock, diluting shareholders, and buying more Bitcoin. Yeah, if you know what a Ponzi scheme is, I'm not saying Bitcoin's a Ponzi, but I'm saying this is kind of the foundation of a Ponzi scheme. You need more money coming in for the price to continue to go higher. So you could argue anything's a Ponzi scheme. What's a stock worth? What's this worth? Right there. Again, it's very tough for Bitcoin because there's no intrinsic value. It's not a company producing anything. It's actually, right, if you're mining Bitcoin, it's actually taking away, because you're taking away energy resources to mine the Bitcoin, which doesn't technically serve any real purpose in the real world other than, you hope it goes up.
there's a lot of companies that are getting more heavily involved. I think recently Hut 8 announced, Hut, H-U-T. And then Rumble, Mind, and they're flexible and witty. And then after that, they can borrow money. So Riot just this week issued a $500 million convertible bond. Riot. Bitcoin with it. And Mara.
Convertible bonds.
No, Riot Bitcoin convertible bond deal. They bought, we were going to pursue a Bitcoin $15 billion or something. It took us 30 years to accumulate $500 million in order to buy Bitcoin in 20 weeks, or 5 weeks to accumulate the next $15 billion. So you would check off that box, which is company adoption. And then after that, you've got like institutional adoption, the endowments and the pension funds. There's now pension funds that are starting to allocate to Bitcoin, and there'll be big university endowments and 501c3s and insurance companies. And so that's another driver. And then you've got nation states. And of course, the news of the week is the United States Strategic Bitcoin Reserve. And the U.S. already has about 1% of the Bitcoin. If they don't sell it, that's a big deal. And Donald Trump said, never sell your Bitcoin. And then he was elected president. But now you have Senator Cynthia Lummis advocating for a U.S. Strategic Bitcoin Reserve. You have a very supportive cabinet, lots of cabinet members that have been pro-Bitcoin.
So I have to add a valid point here, right? President Trump just signed the executive order. It did not specifically call for Bitcoin. It said cryptocurrency assets working group, right? So a lot of Bitcoin enthusiasts like Michael Saylor were hoping the verbiage was a specific Bitcoin strategic reserve. That did not happen, but it's still bullish for the sector. So he does make a good point. I do believe that Bitcoin will be one of those assets in the strategic reserve, but it is not specific to Bitcoin. Bitcoin will be involved, though.
And then Senator Lummis just posted a tweet just a few hours ago, having met with the incoming Secretary of the Treasury, Scott Bessent, White House. And I think we need to lead. So I think that that's also positive. So let's just say there's a lot of different entities in the world with capital. I mean, who doesn't want to keep their money? Who doesn't want more money, right? Everybody wants to either keep their money or they could use more money. And
Michael, if you're listening, I will say you're a very good salesman, right? You make me want to close this video and go buy Bitcoin right now. I love money, right? I love it going up. And to all my listeners out there, right, this is the time where you need to really think about, hey, is getting in at the very top of Bitcoin worth it? Or, as history has told us, and as Michael, I think, alludes to in this video, there's volatility. And that's as he says, a feature, not a bug.
And so Bitcoin is digital money. It's the greatest digital monetary network in the world, and maybe it's the first example of what I call digital capital. It's money, just so I can help people not be confused. Money is a generic term, but it decomposes in the modern world into two elements, currency and capital. Currency is the dollar and the peso and the euro. That is the medium of exchange asset. It is designated legal tender. That means you can swap it without paying a tax bill on it, and it means it's liquid and fungible, and probably it's good for paying taxes, and everybody prices things in it. That's not going to change. The world reserve currency is the dollar. The dollar's been the world reserve currency since just after World War I, and in different forms. The dollar is getting stronger, not weaker. But there's another aspect of money. It's store of value. If I had a liquid fungible asset that was a store of value that I could give to my children's children, well, nobody thinks that's the dollar, and nobody in the U.S. thinks it's the dollar. Rich people in the U.S. don't have 50% of their assets invested in dollar bills. And what they do think it is in the modern world is they think it's the S&P index, like the Vanguard 500 or SPY or some index fund, or maybe they think it's real estate. And real estate's a store of value, but it's not liquid and fungible. So it's a little bit different. It's difficult to swap it out in units of $1 million every day. And so it's not quite money, but it is capital in that regard. And gold for 5,000 years was kind of capital. It was a bar of gold bullion was that long-term store of value asset that people use. Bitcoin is emerging as digital capital, and people, they're not going to use it as a medium exchange to buy a cup of coffee. But if you want to buy something to give to your granddaughter that she can't mess up, even though she's 3 years old, and you don't want to worry about it every day, and you don't want to trade it, and you don't want to worry about antitrust and whether or not there'll be rent control on the building or renting it out, you just buy her one Bitcoin and you put it in cold storage, and then 60 years from now, she'll be rich because the one Bitcoin will probably be worth $50 million or $100 million, right? And so
that's a very strong looking statement, right? I would never put my neck on the line and say anything is going to go up in value over the next 50 to 100 years. All right, so that's a bold statement. Again, great salesman, Michael Saylor, but that's a very bold statement.
What's going on right now is the emergence of Bitcoin as a digital capital network for the world. And the thing driving it from 100,000 to 13 million over the next 21 years is the adoption of it as a capital asset by people that have the wealth, have the capital.
All right, a lot of people in my audience are not going to understand why you can't just store your money in dollars. I have a whole tirade about it, but I'd love to hear why. How do you explain to people why you can't just put your money in a bank account under your mattress in dollars?
The simple answer is the supply of dollars expands about 7% a year every year for the past 100 years. And what that means is that if you want to buy something that is a very scarce, desirable asset that the government can't make more of and that manufacturers can't make more of, if technology and capital and machinery and robots can't make more of it, it's scarce and desirable. Here's an example. An acre of beachfront property in Palm Beach, or a beachfront house in the Hamptons, or waterfront property in Miami Beach. That's a desirable place to live. You can't make more of it. And if you go back 100 years, you'll see that the value of that acre was $10,000. And you go forward 100 years, and that is about $10 million. And for those who are very quick at math, they'll realize that works out to 7% increase in price every year for 100 years. And that's why people buy houses for $100 million on the beach in Palm Beach. And my house, the house that I'm in right now, it was sold in 1930, and I have the deed on my wall, and it was sold for $100,000 in 1930. If you put that $100,000 in a vault and you kept it safe and sound for the 90 years, and if you took it out, it would pay about 8 to 12 weeks of my property tax on this house. Like you literally couldn't keep the house for 8 weeks. Go ahead.
Let me say it in my way. Tell me if this resonates with you. The reason that you can't store your money in cash is that the government steals your buying power by printing.
Before we continue, I want to make a counterpoint to what Michael Saylor just said. He uses this real estate analogy all the time. I think he mentions it in this video as well about, if I bought a beachfront property, if I bought a property in Manhattan 300 years ago, it would have just accumulated in value. And that's even the point that he made before, right? Central governments around the world, they're devaluing the currency. This is true about almost every single property in the world, that if you bought it 100, 200 years ago, the price is significantly risen. And that same point is true in my hometown. The price that was bought for my grandparents' house in the 1950s, right? That ticker price of $15,000 wouldn't even cover the taxes of today. So yes, the assets that are more desirable, beachfront property, so on and so forth, in great locations, yes. But to compare Bitcoin to real estate, in my opinion, is insane, because you cannot live inside of Bitcoin. Real estate provides a real world use. You need a roof over your head. If you want to raise a family, you're gonna want to raise them in a nice property, a nice house, nice condo, beachfront property. Bitcoin does not serve that purpose. Yes, it could be a store of value. Yes, if the central banks around the world, and I'll say it again, devalue the currency, right? Bitcoin does have a good use case, but when that happens, it artificially causes inflation, right? And that's a whole separate just topic. But to compare Bitcoin to real estate, in my opinion, is just it. You can't compare the two. You could talk about the prices, but Bitcoin does not serve anywhere near the real world use that real estate does, or other assets, physical assets, right? But this is the example that he goes to a lot, and I believe he continues talking about it.
More of it. I find it's very sobering to look at it as theft. Does that resonate with you, or do you think I'm being hyperbolic?
No, you're correct. In essence, the inflation of the dollar supply means that your wealth is cut in half every 10 years if you hold all your wealth in cash. And it's the rule of 72, right? You divide 7% into 72. That's the half-life of the asset. So the half-life of your wealth is 10 years if you store it in cash. If someone gives you an asset you can invest in that goes up 7% a year, you're keeping up with inflation. You're not getting wealthier, but you're not getting poorer. You're just treading water, And if you're beating that hurdle rate, then you're getting a bit wealthier. So once you understand that, you can see that you can't preserve your wealth for long periods of time in a fiat currency. And the best fiat currency in the world, Tom, is the dollar. But in most other currencies, they inflate at 14% a year, and that means the half-life of your wealth is 5 years. But in a weak currency like in Turkey or Syria or Iraq or Venezuela or Argentina, it used to be for 20 years, the inflation rate looks more like 28% a year or 30% a year. And we take example the peso. The peso went from 1 peso to the dollar to 1,000 pesos to the dollar over 20.
I'm actually gonna agree with Michael Saylor on this one. He is right on this. I mean, this is, I think, the biggest use case for Bitcoin is, if you don't want to, bury your money in your backyard, which I think is insane, or put it in a savings account yielding, 0.25% at most big banks around the world. This is truly the case for Bitcoin. All other cases put aside, I agree with Michael Saylor here. I will give him credit for this one. Right, he does have a valid point, and I think this is why you're seeing so much interest in the cryptocurrency sector, especially Bitcoin.
20 years.
Jesus.
Okay, so I don't, in America, you got to keep in mind you're an American. You live in the greatest country of the last 100 years. America won every war, right? We were the winner of World War I. We got richer. We were the winner of World War II. We never lost a war. We were the winners of the century. Our currency lost 99.9% of its economic power over the 100 years. But if you went to Nigeria, or like Germany, the currency crashed like 2 or 3 times, right? In Japan, the currency crashed. In Russia, it crashed last time the Russian currency crashed in '98. The Brazilian currency crashed completely 25 years ago. The Argentine currency crashed about 4 times in 100 years. So if you're an Argentinian and you're 30 years old, you already know what it's like to have hyperinflation because you lived the entire cycle. It's just Americans don't. And so if you're taking advice from an American business person like Warren Buffett or Charlie Munger, well, I mean, they didn't live through the Weimar Republic. They didn't live through the collapse of the currency. By the way, the currency collapsed in Venezuela. It collapsed in Argentina. It collapsed in Brazil. It collapsed in Cuba. It collapsed in Russia. It collapsed in every single country in Africa. You see? And so foreigners actually get it a bit better, right? It's like the bank's going to take your money. The currency's going to zero. The government's going to promise you it'll be okay and tell you to put your money in the bank. Then they're going to inflate the currency, freeze your bank account, crash the currency, and then tell you it's worthless. That's what happened in Cyprus not too long ago, if you want to go Google that. And so the real promise of Bitcoin is very simple. It's a bank in cyberspace that won't steal your money. And it's an asset that you can store your life savings in that nobody can debase or corrupt. And those are 2 powerful promises for the first time in the history of the human race. No one ever gave you those 2 promises ever before now.
Yeah.
These are great points by Michael Saylor. I'm not going to argue with what he said. That was all fairly, that was all correct. However, if you lived in America and you're an American, you understand that, putting your money to work in stocks and companies that can produce cash flow, for example, right? If you've been following the news over the past 3 years and you invested in a company like Nvidia, right? That's just, I'm cherry picking here, but you would have significantly outperformed Bitcoin, and you own a company that actually is producing a piece of equipment, chips, server racks, that actually is improving the world. Can you say that about Bitcoin? Can you say that, Bitcoin is physically improving the world? You could say that, yes, it may help those citizens that live in the countries that Michael mentioned, prevent their government from debasing their currency or debasing the money that they worked hard for. That is a good point. However, there is volatility in Bitcoin. And my fear here is, right, Michael Saylor is a multimillionaire. If you're one of these folks watching this and you're putting all your money into Bitcoin, every single extra dollar you have in your paycheck, and then a year, 2, 3 years from now, it goes down 50%, you can't pay your bills, right? That's a different story. So good points, Michael Saylor. However, there is always a counter argument.
The thing that, and a lot of this started with me getting to know you, researching cryptocurrency, that you're now talking about in a really clear fashion, that until I started researching you for this episode, I never heard you delineate it this way, that money is bifurcated into those 2 elements. You've got the money that you spend, cool, but then you've got the money that you're trying to preserve your wealth over time. When I tell people the way you should think about your house is not something that's going to go up in value over time. You should think of your house as something that you pay an insurance policy against, the upkeep, the property tax flooded into that area, or not. Now,
I think that's fair, by the way. I think that's definitely a good way to think of it.
Yeah, I think so. My own company, when I start talking about this stuff, my employees look at me a little bit like I'm crazy because I'm so aggressive about getting people to understand, and it'll be very interesting to have this conversation with you, that ultimately.
Another quick point about real estate. If you're buying real estate, I don't think anybody really can expect to make money, right? If you're sitting here looking to buy a property for your family to live in, if you think you're going to make money over the long term, I don't think you've run the numbers. Property taxes, upkeep, mortgage payments, the interest you're going to pay on that mortgage payment, so on and so forth. The money that's made in real estate is when you buy properties that are, fairly, if not undervalued, and you can map out cash flow. Again, it comes down just like a publicly traded company. If you can get cash flow from that real estate or that business, that real estate business that you're running, that's where the value's added in real estate. Okay?
The stock market is gambling. And once you understand that people have been forced to become gamblers based on inflation, that you have to find a way to outpace inflation, otherwise you lose your money. And the really smart among us look at the capital system, look at the equities market, and they go, oh, cool, I have a really complex way that I can find arbitrage basically in these moments where if I find an area of risk that I think I understand better than the next person, I can come in, I can buy that asset, it goes up in value compared to what I can sell it for down the road, and I'm able to sell it for a bigger win than inflation. And that forces everyone to play that game or to just have their buying power stripped away from them, which of course is what happens to the vast.
I see the point Tom was making here, but is it gambling if you bought the S&P 500 at literally any other point in history and tracked where it was virtually 20 years later? I believe the statistic is you would have never lost money. So that's for several different factors, right? Inflation, devaluing the dollar, so on and so forth, right? So is the stock market gambling? I guess that's up to your interpretation of what type of investor you are. If you're just buying meme stocks and this and that and NFTs, then maybe it is gambling. But if you're really analyzing a company, breaking it down to its nuts and bolts in the balance sheet, looking at the discounted cash flow model, the cash flow, future cash flow, the products, all of that, right? You could argue that it's a form of gambling, but also you could, in one way or another, right? It is true speculation. Same thing with Bitcoin. Michael Saylor doesn't know Bitcoin's going to 13 million. Nobody knows Bitcoin, right? Lately in the news, right? Quantum computing. Now folks are scared that the Bitcoin blockchain can be hacked. So nobody knows the future. If anybody's giving you a price prediction, it's just their opinion, right? Take it with a grain of salt. And that's my comments on that.
Of call it normal to undereducated. They're just that as. But I think if people understood, it's really going to help them. So you've said, I want to see the entire world recapitalize in Bitcoin. Now, when you say recapitalize, is what you mean, hey, that part of your wealth that you want to store to maintain purchasing power over time, all of that, instead of being in real estate, instead of being in treasuries, instead of being in equities, that should move over to Bitcoin. Is that what you mean?
Yeah, that's a good way to say it. You've articulated that quite well. Yes, build your house on a firm foundation. Don't build it on sinking sand. Don't build it on a swamp. Build it on a granite rock, on schist. And I guess if I could give the math, the risk-free rate of the dollar, if you're capitalized on US dollars and you were to say buy treasury bonds, the risk-free rate is something close to SOFR, or the standard overnight funding rate. And that ranges, but after you get paid that rate and you get taxed on it, you might get paid 5%, you get to keep 3% after tax. Maybe if you're tax-free, you get 4.5%, and if you're taxed, you get 3%. So the risk-free rate of return of your capital on that dollar standard is like in the 3% range.
We'll get back to my conversation with Michael Saylor in a moment, but first, let's talk about digital security. As a CEO of a media...
The risk-free rate for Bitcoin, as I just described it to you, 29% over 21 years, about 30%. So the way I look at investments is when you're pitching me an investment idea, I say, well, I got a lot of money in Bitcoin and I'm expecting about 30% risk-free for the next 20 years. You have to actually pitch me an idea that generates more than 30%, plus the risk premium, plus the tax efficiency. If you told me, here's a thing that'll make me 50% a year, but it was going to be taxable, that might be 40% a year or 35% a year. And I'm like, well, after the risk, it's still not as good as my risk-free rate of 30%. So if you're capitalized on Bitcoin, if you understand it, and if you understand, if you have a long time horizon, if you're going to hold it more than 4 years, you don't care about the volatility. All you care about is the annualized return. The annualized return.
Hold on, because there's a lot of assumptions in there. So I know a lot of people are clutching their pearls right now about Bitcoin being referred to as risk-free. So can you break down for us the difference between that volatility and then how you can have the confidence to look at this and say, no, the risk is merely a timeline question? Because I think a lot of people will take exception to that.
Yeah, so, well, the dollar is zero ARR, zero volatility. That is to say the dollar goes up 0% against itself each year, and the dollar is zero volatility against itself each year. So if you're on the dollar, you're living in flat land, and you're a stationary person in flat land, a pedestrian in flat land. Bitcoin is going up 60% a year against the dollar. How long? Well, since MicroStrategy made its first investment 4 years ago, it's 60%. But if you stretch back 6, 8, 10 years, I think it's also 60%, so like a decade. But you can measure it back a decade, and you see it's going up 60% a year. And it's 60 volatility. It's a 60 vol against the dollar. So you should think of Bitcoin as an asset. It's like you're on a speeding train going 60 miles an hour, and you've got a flywheel spinning 60 RPM. And the pedestrian on flat land is standing on the plane watching the train go by, thinking this is scary. It's going to suck the oxygen out of my lungs. And they're thinking, my money isn't an asset because it goes up 0% a year. So they have a different view toward money than the view of someone on the Bitcoin train. The person with $1 million of cash is going to have $1 million of cash in a decade. A person with $1 million of Bitcoin is going to double their capital every 18 months. If they just hold on to it, right? And so they're going to double it once, twice, 3, 4 times at that rate, right? The volatility
this really does come down to, sorry, and I'll let you get back to that. Yeah. This does come down to a belief that when you look into the future, that the setup that makes it have the 60% ARR is going to continue. Because I look at this and I say the only reason that it has that kind of reward is that it is volatile, that there are question marks. Because if there were no question marks, everyone would flood in near instantly. It would hit homeostasis, and that would be that. So I think Bitcoin is anything but risk-free, but I do think that the volatility is advantageous for the people who are going to be right if people are right about the upside. That's the most fair way to say it. Why do you think the best way to conceptualize this is as...
I'd like to say that fantastic comments by Tom there. I literally couldn't have said that any better myself.
Risk-free.
Howard Marks would say volatility is not risk. Volatility is volatility, right? A merry-go-round, or a carnival ride or a roller coaster is volatile. The risk part is if you fly off the roller coaster, right? If the merry-go-round stops working, etc. So the fundamental risk of Bitcoin is the existential risk of an extinction level event and Bitcoin, right? If space aliens come...
I understand where Michael Saylor is going to go with this. I just want to... Any type of asset, right, has the psychology of humans at play, right? Who's buying and selling these things? It's humans. Humans get very excited when the price goes up of things, and it's in our inherent nature, right, to get very scared when things go down. So for Bitcoin to have its use case, for me to completely agree with Michael Saylor, is in the next recession or depression, hopefully it never happens, but business cycles are real. If Bitcoin does not go down in line with stocks, or even more than stocks, and retains its value, I'm sure there'll be a significant sell-off, but if it retains its value and continues to soar, if central governments continue to print money, then I think it would be cemented that Bitcoin is a good asset to be holding in your portfolio. That's my opinion. I know Michael Saylor would disagree, right? If Bitcoin goes down 50%, he's going to buy more. Okay, well, if it goes down 80%, you're out of business, or likely close to out of business. I don't know the financial structure of MicroStrategy, but that's how I look at this.
down and say, we're taking your Bitcoin away from you, right? Then I guess there's risk. If some evil genius finds a way to create a cyber virus that infects.
I believe there's actually recently somebody was ordered to give over their keys to their Bitcoin in a court case. Again, nobody's got a gun to your head. They can't tell you to do that, but the government technically can seize those assets and force you to take your key or throw you in jail. So that is a risk factor, but probably a one-off. But going to be interesting to see if taxes are imposed on these type of assets here in the near future. And I know there's a lot of folks that are sitting on major gains, right? Imagine selling $100 million of Bitcoin and you got to pay capital gains, state taxes, stuff like that. That's why you're seeing folks who at least live in the United States moving to Puerto Rico and these states where you're not going to have to pay that significant tax burden.
And destroys the Bitcoin network instantly, irrevocably. That is the risk. So, but that's kind of like that's the existential risk you take when you get on the airplane. If it crashes, that's the existential risk you take when you cross the street. That's the existential risk you take when you put a piece of food in your mouth. And you say, well, can you imagine that hurting me? And I say, yeah, if I put poison in the food, you're dead. Okay, so do you trust me? Do you trust the waiter when you put the food in your mouth, right? So yes, there is some risk in life. And the existential risk is that extinction level event.
You don't think there's another layer of risk in that, not existential, because you're saying the risk-free return of Bitcoin is 60%. But I think there is, it seems strange to me to not allocate some percentage of, maybe it doesn't grow that fast, maybe it doesn't remain 60%. You yourself say over the next, 21 years, it's going to come down. It'll average out over about 29.
I just thought of this, pretty plugged into science, but besides an extinction level event, what about an event such as like a solar flare? If there's a solar flare that knocks out all the chips across the world, knocks out all the satellites, the electronic grid, what happens with Bitcoin? Is there a underground safe, blockchain? I don't know the answer to this question, but I was thinking that could be another extinction level event. Again, if you're worried about your Bitcoin at that point, the world's got bigger issues, but hey, it's a possibility. It could happen. I'd like to hear you in the comments below. If there is a solar flare, knocks out all the electronics across the world, what would happen?
9%, what if that accelerates and the return ends up being substantively less than that? So I get saying that this has a better chance of having a higher annual rate of return than, say, the S&P 500, which maybe we clock at 15%. We say, we might not hit 60%, but we're probably not going to drop below 15%. Therefore, 15%.
I'm going to skip forward here. You're going to hear numbers thrown around, 30% annual risk-free. Only time can tell. Right, that number could be higher, could be 60%. It could be negative 20%. Right, so I don't really. I take any forward-looking statements with a grain of salt, as should anybody investing or looking at assets. So I'm going to fast forward here a little bit. This video is over 2 hours long. I encourage you to go to Tom Bilyeu's YouTube page and listen to the full interview before you form your own opinion. But I do want to skip over here to how can we refine crypto
offshore, and they can't hold the underlying commodity either because it's illegal or because it's against their charter. And they promised their executives, their board of directors, and their limited partners and investors that they would only trade public company equity, options, fixed income, convertible bonds. So that's what they do. That's what they need in order to function. And what we do is we convert crypto capital, crude crypto capital, we convert it into refined traditional securities. And in the process, we strip away some of the volatility, we strip away some of the risk, we strip away some of the performance. And that stuff that we strip away, that they want stripped away, becomes leverage for our common stock, and we give it to the company and the common stock shareholders. That's how we outperform Bitcoin, and that's why we're more volatile than Bitcoin, because we took the volatility away from the fixed income investors that didn't want it, and we gave it to equity investors and derivative investors that need it. And we were just that gateway sitting in the middle.
Okay, yeah. So this whole segment is talking about how Michael Saylor is leveraging, his company to buy more Bitcoin. So, hey, it's working out for you so far, Michael. Yeah. Keep up the good work. If you're invested, there's always risk. Definitely read the investor relations page on MicroStrategy. Let's fast forward.
We say in Bitcoin, that Bitcoin's on a need-to-know basis. So the people that get Bitcoin because they need to. If you're wet, freezing to death, and you walk past a fire, you're going to stop, throw a log on the fire, and you're going to dry your clothes because otherwise you're going to freeze to death. You have a need to know it. If, on the other hand, you're a rich man and you have, a massive ski chalet in Aspen with 10 people working for you and modern heating and air conditioning and a chef, and 3 cars and a helicopter in the back, and you've got a dinner party planned, and you're walking past a little flickering fire, you're probably going to think I should put it out. I'm probably going to step on that 1,000 publicly traded companies and 400 million private companies. They're not exactly the shivering, naked, starving dude running through the forest on the mountainside, right? They don't need it. It's quite optional for them, right? The people that discover Bitcoin are when you live in Nigeria and the bank or Lebanon and the bank freezes your assets and you're either going to starve to death and be bankrupt or you're going to have learned about Bitcoin. They have a need to know. If you live in a hyperinflating economy in Russia or in Venezuela or in Argentina, you're going to know. If you remember your family fleeing Nazi Germany in the 30s and losing everything.
All right. Michael's making, I understand the argument he's making here about if you're living in one of these third world countries or one of these companies where you're afraid central government's going to devalue your currency, so on and so forth. All right, so hypothetically, let's walk through this scenario. I live in one of these countries. I don't keep my hard-earned money that I earn at work in that country's currency. Instead, I buy Bitcoin. Right? What's to stop that government from raiding your house and throwing you and your family in jail and saying, "Hey, you own Bitcoin. We told you can't own Bitcoin until you can't be released from prison until you give us your Bitcoin key." So that's a risk factor. It's extreme, but it's real if you live in one of these countries. Another one is, okay, I'm living paycheck to paycheck in one of these third world countries, right? I'm just a farmer, and I don't want my value of my currency, my hard-earned money, to be devalued. So I'm just going to buy Bitcoin right now at $100,000, and then we'll see if it works out. And then maybe over the next year or so, I need that money, but Bitcoin, unfortunately, has gone down in value, and I need that money at that point. And now, if I just kept it in my bank, would I have the same amount of money? So again, hypotheticals, you could predict that, hey, it goes up 100% or it goes down 75%, right? So it's still very risky to do this, even if you live in one of these third world countries or countries where you're afraid that the government's going to seize your assets. Remember, this is digital. So unless, like you said in the beginning of this interview, like Michael Saylor said, unless you have it in a cold wallet, again, you physically have to keep that cold wallet somewhere, or you're going to keep it in your local government's bank that you already don't trust. You're going to bury it in your backyard. I guess it's up to you, but folks have lost their cold wallets in trash dumps, and now they're going into court battles. So it's tough. I get the analogy he's making here, but I wouldn't say that that's what I would be doing with my hard-earned cash if I lived in one of these third world countries. I guess the first thing I would try to do is get out of that country if I possibly if I could.
If that story's been told to you by your grandfather or your great-grandmother, right, then that resonates, and you think, I think I'd like to be able to flee with my money, when the government goes bad on me. So I think that the message of this is shareholders in a well-run public company do whatever management tells them because they're not looking to pick a fight. And if you're an affluent investor in the first world, you're ingrained in your conventional wisdom, and you don't have a need to know. It's not that you're not smart. I mean, the world's full of very charismatic and brilliant, hardworking, rich, powerful people. That is not the criteria for discovering a new technology. The analogy I give you here is Led Zeppelin. A bunch of teenagers and 20-somethings pick up electric guitars and they create Led Zeppelin and rock and roll.
We're talking
and there were
about
probably
Led
some
Zeppelin.
very
I'm gonna
genius
fast forward
classical.
here.
Of course, it seems obvious. It's like saying, well, how about every other service on earth? They all run on transaction fees, right? So what's the most important service you could offer, right? The service of moving money? I mean,
all right, I'm going to pause the video here to make one of my last points as I kind of wind it down here. However, this is my counter argument to Bitcoin, right? I do agree with Michael Saylor. It could potentially have the use case to store value over time that doesn't get, debased, right? However, the cryptocurrency technology is being rolled out by several other companies that I spoke about on my channel, that financial institutions are going to want to use to speed up transaction times. You swipe your credit card or you deposit a check, instead of waiting a day or two for that transaction to post or the deposit to go into your account, it takes 3 seconds instead of 3 days. So that's where I think the real intrinsic value is in this type of technology. Yes, another feature of it is, yes, you're not going to be creating more Bitcoin than whatever it's capped at, but you're mining more. My counter argument to Bitcoin is those last 100, 200, 300 Bitcoins that need to be mined, you're going to need a nuclear power plant to mine these things, right? And then what if the price of Bitcoin stays, in the next 10 years, it's only 100,000, but it costs $1 million to mine the Bitcoin. I mean, what happens then, right? What happens when it costs more to mine Bitcoin than the value of the Bitcoin? So nobody's going to be. I'll give you the answer. It's just like oil. Nobody's going to be mining Bitcoin at that point. Same thing with oil. Nobody's going to be drilling. They're going to turn the drills down if the price of a barrel of oil goes down below than what's profitable for the company. So I've seen reported 5 major Bitcoin miners are in China right now, and one's in the United States. I think that's a risk factor moving forward. Another one is the government's now going to get involved with Bitcoin. So who knows how much what happens if Bitcoin does go to $1 million a coin, but the government's own 50% of it. and and then the government needs to raise capital, and then they devalue Bitcoin. All right, let's say the U.S. government and the top three governments of the world, Russia, U.S., and China, they eventually buy up, because they have technically an unlimited money supply, they buy up 50% of the available Bitcoin. Somehow, some way they do that. Now what happens? Now, is Bitcoin as safe as you're saying it is, decentralized? How would it be decentralized at that point if all these big governments own Bitcoin, right? Or the Satoshi who owns 10% and the BlackRock who owns another 10%. What if 75% of the Bitcoin is owned by the 1%, similar to how the world is structured now? Then it's not decentralized anymore, right? And I think, as Bitcoin shoots up to 200,000 and continues to go up, I think you're going to get these big players that just dump more and more money into it. So then that farmer that I was giving you an example of before in a third world country, if they buy Bitcoin, then they're still, going to get devalued by one of these big central banks or big governments around the world, because at some point they're going to need to raise money to build bridges, build tunnels, fund defense, do whatever, pay out pensions. They're going to sell Bitcoin to do that. So that is, I think, one of, I'd say, my top three biggest risk factors of Bitcoin right now is that if you're just looking at it as a store of value, you're hoping it's going up in the future. If governments buy in and own the majority of Bitcoin, or it's let's say 99% of Bitcoin is owned by 5% of people or governments, there's way too much risk factor in it at that point. We'll see, but just keep that in mind. That is something that's very scary and that you could see actually happen. It's scary for the holders of Bitcoin, not necessarily scary for the world, but that's a potential.
Everybody pays fees to move money. It's a massive business, right? Visa, MasterCard, the worldwide banking establishment is all based on fees, all of it.
I'm going to fast forward this part, but I do agree with Michael Saylor that, using cryptocurrencies in general, I'm not saying just Bitcoin, I think the entire world needs to shift to this cryptocurrency blockchain type technology, speed everything up. There's a ledger. You could see who got, which transaction. And here's another, I guess you can call it a risk. I think it's a feature, but it kind of would stamp out, this illegal activity that happened early on in Bitcoin. One of the reasons, I'll keep this story quick, one of the reasons I didn't invest in Bitcoin early on is because I was in college and a friend, was describing it, and it was being used on these websites that I'm not going to mention, but let's call it the dark web, to, buy stuff that, is illegal or do illegal thing. And I said, I'm just not getting involved with this. Like I wasn't, I wish I did do, I don't have regret, but I wish I did do a deeper dive. Because honestly, my thinking was, all right, Bitcoin's at whatever, $100 a coin, $1 a coin. If I buy my hard-earned money, which I'm living paycheck to paycheck like that in college, and I have college to pay off, I buy this thing, all the countries around the world make it illegal because it's funding illegal operations, and the thing goes to zero. Now I'm out whatever money I put in. So that's how Bitcoin was in the early days, right? And it's still kind of like that today. You could still use it, backdoor channels. Nobody can really identify you specifically who you are, but if the United States comes forward with regulation that you'll know which wallet, like there will be a name on the wallet, Michael Saylor or so-and-so bought this coin at this price. I think that's a good transparency system. I think bring transparency into the market would be good moving forward. Because then the example I just gave you, okay, if the United States Treasury just bought, $1 billion in Bitcoin, wouldn't you want to know it was the Treasury, not just, a bunch of keys, a wallet on your screen to say, oh, wow, somebody just bought $1 billion of Bitcoin. Like, folks need to keep like a balance sheet of Bitcoin to know who are the actual owners of the Bitcoin. So maybe that'll come out. Maybe folks like staying anonymous, but I think that'd be an important feature to get some transparency moving forward.
So yeah, I think when you get to the point where you have trillions and trillions of dollars of capital, then people are going to pay a fee, dollars, for the digital currency of the U.S. Second, anybody with capital assets outside the U.S. that can't get access to the dollar to capitalize their company, they're going to use the stable coins to capitalize their entity. So you're going to have capital flows from currency, and you're going to have a lot of other capital flows. There's a lot of people in the world, in Cuba, in Venezuela, in Argentina, they would sell their real estate, they would sell their equity, they would sell their currency, they would sell their bonds just to buy the US dollar. That's been proven in Argentina, that's been proven in Turkey, that's proven in Lebanon. So you'll have a lot of currency, a lot of money just flow into the US dollar via the stablecoin. And by the way, an anecdote is, in Europe, if Europeans are given a choice between the digital euro and the digital dollar, they 99% of the time choose the dollar. People in France and Germany and Italy and Greece want the dollar. Now, if I go to China and I give them a choice between the digital CNY and the digital dollar, the vast majority of the money chooses the dollar. That's why it's illegal. That's why the Chinese have a law making it illegal for you to trade crypto, because everybody wants it so bad. They would all buy it. So one, we're talking about economic physics now, right? Capital flow, water flows downhill, and money flows.
That is a good point, right? Here's another risk factor I was just thinking of about the China banning Bitcoin thing. What if the next administration comes in after Trump and they ban Bitcoin, right? These things, like, again, this is why I've given this $13 million price target. If that happens, then, Bitcoin would crash overnight. If a new administration comes in, bans cryptocurrency, gets rid of it out of the strategic Bitcoin reserve, strategic reserve. So there's so many political risk factors, and a lot of the money, again, you go back to the human psychology. If you start getting Bitcoin being banned for whatever reason, or I think what's even worse than it getting banned is if you get all the central governments of the world buying it and holding most of it, and then we're just back to square one where we are today with fiat currency. So there's risk factors on both sides of this. Michael Saylor makes some great points in this interview. I kind of want to wrap it up here. I think he talks about harnessing the technology.
How long does it take running a thing worth $10 trillion a year to pay off a $40 trillion bill? It's like, what I'm coming back to is you have a problem, and I invent a modern fusion reactor, a pocket fusion reactor that will run for 1 million years and give you infinite power, from a bottle of water, and I offer it to you, and you're like, no, I'd rather just tax everybody to death. Like, I think that if you're smart, you figure out we'll just take a few of these, and this is how we're going to grow our way out of our problem. And I'm offering you the same thing, a crypto reactor, and I'm saying the solution to our economic problem is harness technology to generate trillions of dollars of economic value a year. The conventional thing that everybody understands is creating $1 trillion worth of new products and services that didn't exist before, right? That's I got to produce more candy bars, more cars, more planes, more trains, more travel, more concerts, more buildings, more houses, more. That's conventional. That's the P&L side. Robots and AI will help with that. But the unconventional, the monetary, the economic side, the very deep paradigm shifting idea is, here's my idea. Eliminate the toxic capital from the civilization that's destroying $10 trillion a year worth of products and services. The average life expectancy of a human was like 30 when we drank dirty water and we had dirty food and we had dirty air. But after November 5th, I think now it's and then beyond that, avoid placing a crushing burden on the capital markets or on free markets so that people.
All right, I'm going to wrap the video up here. Again, please, I encourage you to go to the Tom Bilyeu YouTube page. I'm a big fan of impact theory. Watch the full interview, formulate your own opinion, but some closing remarks, right? What would happen, hypothetically, if the U.S. government stopped printing money? Would Bitcoin then continue to go up in value if the dollar, if they stopped debasing the dollar, central government said, hey, okay, maybe 10 years in the future, this Bitcoin thing's got some runway here. We can't keep devaluing our fiat currency. Does Bitcoin still have a use case then? Or then at that point, why would, again, I think that's far-fetched. I'm not sure that would happen, but that's a risk. I mentioned some other risks, some crazy ones, solar flares, the U.S. And major governments around the world buying up Bitcoin, and then, then they have a enormous, then the top 1% are holding 99% of the Bitcoin, and then at that point, you're going to buy a fractional share of a $13 million Bitcoin if it gets to that price, and knowing that, the biggest and richest, most powerful countries or investors in the world own it, and they could literally just sell. They could crash Bitcoin 10% in a day. So there's so many risk factors. I think in closing, right, I own, I think, under $10 of Bitcoin. And it's for several of these reasons. But I do hold another currency that I hold another cryptocurrency that I'm not going to mention in this video. If you watch my channel, you know what it is, but it does have an actual use case. I think it could be rolled out. The technology of Bitcoin, the backbone of it, right, the blockchain, needs to be rolled out. Unfortunately, Bitcoin's too slow. Maybe they can improve that in the future. I know Satoshi's been posting, who is this guy? Does this guy own 10%? What if he rug pulls everybody? There's a lot of risk factors. Hey, if you believe in the technology, I strongly encourage you make your own opinion. Again, this video is not financial advice. It's for educational and entertainment purposes only. I am a fan of Michael Saylor. I think he's a very smart guy. I believe his MIT. Right, he does make a lot of great points. I also know that he is the CEO of a publicly traded company that has a lot invested in the price of Bitcoin going up. Right. The term Ponzi scheme, right? Nobody wants to believe they're in a Ponzi scheme when they're in a Ponzi scheme, but what if, right? What if? Just ask yourself, what if Bitcoin is a Ponzi scheme and it does unravel? Maybe it doesn't go to zero, right? Because I think there's always going to be, somebody buying, but there's a few sayings about, Ponzi schemes, right? You don't want to be the last person holding the bag, so on and so forth. So in closing, I would say the true test of Bitcoin is yet to come. It's when the world is in a global recession. Are folks then buying Bitcoin to retain assets on their hard-earned fiat currency, or is everybody panicking or running for the door because it's so volatile and it's a race to the bottom and Bitcoin's down back at $1,000 a coin because everybody needs money in the real world to buy food, to pay, to gas up their car, to pay their mortgage, right? And the thing that I'm most fearful of is when potentially governments of the world could print money, buy Bitcoin at $1,000, buy it very cheap, buy up a ton of it, and then the world comes out of a global recession, and then guess what? Now 99% of the Bitcoin is being held by central banks of the world, which this isn't far fetched. The world hasn't seen a depression like in the 1900s, and if that does happen, I would be very fearful of even key players, maybe multi-billionaires buying up most of Bitcoin. And then, the institutional investors, the regular folks who are just trying to buy a little bit to get ahead, right? In closing, I think if you really believe everything Michael Saylor is saying, and you want to store your value, there's other alternatives. I'm not going to hype this video up with gold or, buying companies on the stock market. Everything comes with risk. I think Bitcoin is very volatile. It was literally 3 years ago at 17,000 or less a coin, and now it's at 108,000. And all of a sudden now everybody's coming on every channel and saying we're going to 13 million and this and that. So take everything you hear with a grain of salt. Remember who is giving an interview, or even myself on this YouTube channel. Formulate your own opinion like I did. You may not agree with everything I said. Again, this is for entertainment purposes only. I encourage you to go watch Impact Theory. Watch the whole Michael Saylor video. There's a ton of Michael Saylor videos out there, but I hope everybody makes a couple bucks. I hope everybody gets ahead in the world out there, saves money, lives below their means, and can retire, live a comfortable life, and provide for their family. But there are many risk factors to Bitcoin. Yes, there's many positive factors as well with the new administration, at least in the United States, rolling out. So it's an interesting space. I think it's very polarizing, right? You have opinions on both sides, and I think it's always been like that. I think it's going to continue to be like that in the future until you see some stability. And unfortunately, when I think that stability comes is when Bitcoin is not producing a 30% compounded annual growth rate or 60%, whatever number Michael Saylor throws out there. I think, the law of large numbers, eventually it will get down to probably. And here's the biggest fear. What if the return on Bitcoin is lower over time once it settles out? Let's say it does go up, or it goes up to $1 million, right? Fantastic. If you got in early, you're sitting pretty. But what if the annualized compounded growth rate from 2030 to 2040 is only 6%, and the S&P is returning 9%? That is the future scary risk. And I think, I can't speak for him, but I think there's going to be an exit strategy for some of these companies, right? I think Michael Saylor said, by 2030 or 24, whatever the number is, it's going to hit 13 million. There's going to be an exit strategy for some of these folks, right? And they're going to go buy that beachfront property in Miami like they want, right? Humans want to enjoy. I want to go on a tangent here, but people are going to sell Bitcoin to buy real things in the real world. They're going to want to improve their families' lives. They're going to want to pay off their debt. They're going to want to buy a house. They're going to want to buy a nicer car. And in the consumerism world that we live in, the materialistic world that we live in, if you think Bitcoin's going to just be a straight line up and to the right on your chart, I think you're sorely mistaken. And I think human psychology will reveal that, when things are going bad, people freak out and people are going to sell Bitcoin. And that's what I'm going to be paying all assets, not just Bitcoin, but that's what I'm going to be paying the most attention to, who's buying. And that's why I call for some transparency. But thanks for watching. Please hit that like button. Please subscribe to the channel. I look forward to doing more reaction videos like this in the future.